So yesterday, Homer sends me a video on IBM, and it's this attractive young lady who explained to me what IBM is and how they're a wonderful investment. And I thought, oh, come on, IBM is a dead company. I don't know who the CEO is. I've never seen anything really on them. But she went on to explain that they're creating their own chips, and they're very progressive, and they're very active in the quantum computing area. And I came to understand that they're still in the mainframe business. And I thought, come on, the mainframe is something of the past. We need data centers with GPUs and CPUs that are more agile and more productive and more efficient than those big mainframes. And what I learned was that a mainframe is efficient if it does its certain kind of task, and that they specialize in using these mainframes in the banking industry. In fact, they claim that virtually every large bank in the world uses IBM's mainframes. And the reason is to process the processing needs of a bank. It is basically doing things on statements, and they're repetitive. It's the same thing whether it's this bank, that bank, or that bank. It's the same repetitive kind of statement, and mainframes become much more efficient and require fewer people and fewer maintenance. So than your standard server does. So then I was with a couple who worked for a insurance company, and they said, "Oh yeah, we had mainframes as well." And in fact, what we got in the habit of doing, like the banks were, is going up and buying up smaller companies, such as a smaller company had 10,000 or 100,000 policies. Well, to handle those policies, you just keep doing the same task over and over. And we could go buy an insurance company that had maybe 300 employees and bring their policies into our company, plug it into our mainframe, process them, fire the 300 people, and hire two people and run it. And that's how we became efficient. And IBM, as they said, made the software and gave the counseling and the advice and made it very efficient for us. And so as I dug into IBM, and when I say dug into, I went to their books, I found out that they are about half the company that they were 7 years ago. But yet they're making money. And I want you to see how I discovered this, so that when you want to say, why is this company a good investment or a bad investment, you go to their books. And I want to show you what you learn when you go to their books, so that when you decide, do I want to buy this stock or don't I, you can go to their books. I'll show exactly where I go and how I interpret them, so that you can make a better investment decision, so that you can take control of your retirement account and you can get 70% return on IBM over the past year, because of what I'm seeing. It just might continue to do it. Let's go look at the books. When I say let's go to the books, I mean let's go to Seeking Alpha. This is Seeking Alpha's presentation on IBM, and I don't think you can beat it. As you can see, they're showing that over the past year, it's up 70.11%. When I go to the books, I go to their financials. I click here, and the first thing I go to is their income statement. And I want you to look at this bar chart. And that tells you the movements of their revenues from 2014 to 2023. And as you can see, there's a drop. If you want to see the exact numbers, it was a $90 billion company. It's now a $61 billion company. That seems to me like it's down a third from where it was in 2014. But that isn't the worst of it. It got down to a $54 billion company in 2020. How did their income hold up? Well, they were a 20 out of the the 90 billion. They used to make 20 billion. Pretty good operating income. That dropped to 4 billion. Then that dropped to 1.6 billion, and now they're up to almost 10 billion. Down, so they're half of the company they were in 2024, and yet they're up 70% this year. Why? And why did it drop so dramatically in 2022 to 1.6 from 20.1? Why did it drop? And then what led to its comeback? A growth of some, what would that be? 6 times in the from 2022 to current date. Why did that happen? Well, we can come down here and we can see they cut their operating expenses dramatically. Their operating expenses were running in the neighborhood of 15 billion. They got it down to 1.7 and now they're at 8. So they cut their expenses. All right, I can deal with that. If we come down here to income, we see they were making $12.0 billion. They got down to 1.6. Huh? And now they're up to 8.4. What happened? Well, one of the next places I love to go is that of the balance sheet. And I go to the very bottom of the balance sheet because I want to see what they did in personnel. In 2014, they had 179,500 people working for them. They took that down to 282, and they've stayed there. That's about a third drop in their employees. That's how they revamped their company. Okay? And they turned a company from a loss to a profit. So the next place I go is to see what their earnings. What do all these numbers transpose into as far as earnings? Earnings per share. The effectiveness of taking my dollar that I invest into them and turning it into more dollars and then continually growing those dollars. So I go to earnings and I go to earnings estimates, and here we have their earnings estimates. I can go back to 2022 when they were making $9.13 per share. 2023, $9.62, up about 50 cents a share. And then we go to 24 and it's 1017. And we come down here and we can see that 1017 represents a growth factor of 5.68%. Not too outstanding. Next year, they're expecting another 5% growth. Is that good? Well, we can compare, and you can see that's kind of the best they do until we get down to 2009, and they have growing earnings of 9%. Well, how does that compare to the other people in the semiconductor, in the computer, in that kind of industry? So let's look at somebody else's earnings and get a comparison. Well, this is NVIDIA. 2025, I think IBM was 119. 26 was 5, 41.6, 17.6. Well, yeah, but that's NVIDIA. Why don't we look at what would be another company that might compare or be representative? Let's look at Google. This is their earnings projections. 13, that's what, 2.5 times? 14, 16? Huh. How about somebody like Microsoft? That'd be a good one. And you can see, I can pull all of these up here on Seeking Alpha. Here's Microsoft. 11, 16, 17, 13. Revenues, growth, 13, almost 14, 14, 15, 14. So why are we seeing such growth in IBM? Let's look at a chart and see if we can get anything here. Here's IBM's growth. Let's on a daily basis. I like to look at it on a annual basis. So let's go down here and find 12 month. There's IBM on a 12-month chart. Look what happened this last year. Now that blue line represents its 5-year average, okay? And so I say something changed, and we know what changed. They fired people. They started showing some profits and started showing some growth. They put their books back together, but I think they're out in front of their skis. I think they're growing too fast. What I've done here, this blue line is their 5-year average growth. I extended it and said, okay, if they stay on that trajectory, here's 2025 5, that would be the start of 2025, and I'm suggesting it isn't going to get much higher than this, but sometime next year it's going to come down to 172.46. It's going to reach there. Then we'll have to wait and see. I just don't see in this marketplace a company that is growing its revenues and its earnings at 5%, keeping up that kind of pace. You make your decision. This is a Fibonacci retracement that basically says when a stock gets a overabundant growth, it gives back 50 to 78%. This would be the 50, 156.05. The 75 would be way down, or 78 would be down 113. I think it's got a home. It's going to find a home next year at 173. I'm going to, tomorrow is their earnings on 23. I've got an order to sell what I've got. I don't want to go into earnings with a projection with that kind of growth behind them as we go into earnings. That's my take on how I analyze stocks. I would suggest, if you like what you see, particularly on the Seeking Alpha part, that's available to you on Seeking Alpha. And there's a discount in coupon in the description. Or you can sign up for Best of Us Investors, and I'll share my findings with you on a regular basis. And on my website, all of this is available on my cheat sheet. Have a good day, good investing, and remember, whenever you're in doubt, go to the books.